This is Tax Chats. Hello, I'm Scott Dyring.
And I am Jeff Hoops.
And we're here to chat
about taxes.
Hello, and welcome again to another edition of Tax Chats. I'm Scott Dyring, professor of accounting at Duke University, and I am joined, as always, by my friend and colleague, accounting professor extraordinary and tax museum curator, Jeff Hoops at the University of North Carolina. Hello, Jeff.
Hello. It seemed like you almost practiced that. It came off much more slipperily and much more quickly, and it was amazing, Scott.
I'm getting better
introduction.
I'm getting better at introducing you with the multitude of titles that you possess over there.
Yes. I might give myself some more honorifics at the Tax Museum. We have a board meeting later on this month, and I might be bestowing upon myself some more titles.
Chairman of the board now, in addition to
yes,
curator. Well, Jeff and I have been talking. So, Jeff, I think we have something fun to talk about today. What do we got?
So this is Tax Chats, and we talk about taxes. It's often about corporate taxes, and yet never before have we actually just stood back and asked ourselves a pretty basic question, which is, why do we even have a corporate tax? It might seem to the uninitiated like an obvious thing. Obviously, we have a corporate tax because there's corporations and we should tax them, but it's not necessarily as obvious as you might think. And it's actually something that the tax profession, including economists and accountants and lawyers, have struggled a little bit with coming up with a justification for the corporate tax.
By the way, I always ask my students, why do we tax corporations? And I would say probably the most common answer, because they have a really big bottom line.
That's where the money is.
Yeah, and we're going to talk about that and other reasons. I think it might be a little more complicated than just where is the biggest bottom line.
And so what we're going to do is basically I'm going to kind of mention a whole bunch of arguments that have been thrown out there for why we tax corporations, and we're going to chat about it. Scott's going to give us his thoughts on it. We're going to talk about all these different things. But I think to start off with, before we begin with all of these arguments, it's pretty important to lay out why it's not necessarily obvious that we should tax corporations by thinking about what a corporation actually is. So why is it that understanding what a corporation is influences how we should think about how we tax corporations? What do you think about that, Scott?
Yeah, that's sort of gets at the crux of the issue, I think. So sometimes we think of corporations as these special legal entities that are treated almost like people. They have legal status in the courts. They have limited liability protection. There's all kinds of legal things that are kind of like protections that sometimes citizens of a country might get. And
several of our constitutional rights are afforded to corporations at this point, including free speech, et cetera, et cetera.
Yeah, and so some people look at this and they say, if the corporation is treated legally kind of like a person, maybe it should pay taxes kind of like a person. So that's one argument. But exactly what is a corporation is sort of the subject of some debate too. And so you could go way back in kind of economic history to Burrell and Means or Jensen and Meckling, the theory of the firm. These are kind of famous economists who have written about what is a firm. And another view of the firm is kind of not really even a thing. It's just like a nexus of contracts. You get a bunch of contracts put together, and you have to have some umbrella under which those contracts exist. And then you end up with a firm, which is just the kind of combination of all of these contracts.
Now, we throw around that term, nexus of contracts. What do you mean by what kinds of contracts are there?
Well, you could think about a firm as having contracts with its workers to get them to cooperate, with its creditors or suppliers of capital to decide how the terms upon which the capital is granted. You could think of them as having contracts with suppliers. All up and down through the supply chain, you could think of contracts that define what the firm will do, what it can do, what it can't do, and kind of creating a legal entity to create or to kind of accumulate those contracts might be an efficient way to operate business.
And then once we've created it, we have the corporation. And so then the question is, should we have, again, like this nexus of contracts, just this, a bunch of people agreeing to do a whole bunch of things. Some people are agreeing to provide capital. Some people are agreeing to provide labor. Some people are going to organize that labor. Some people are going to bring supplies. Some people they have all these different agreements. Why should we tax that combination of agreements? Okay. So let's start off with the argument that your MBA students have, which is a pretty common argument, and it's basically that we should tax corporations because that's where all the money is. So we should think about like the ability to pay, and we have these entities. They have like a giant bank account. Somebody can write a check out of that bank account. We might as well tax that thing with the big bank account. What do you think about that?
Well, okay, so I think we should back up actually just a little bit first, and then I will answer that question directly. And the reason I think we should back up is the first question I always ask my students is, who pays the corporate tax? And they always say, of course, the corporation does. And if you think about it, that is actually kind of technically true. The corporation writes a check to the government. But the reason this gets complicated is because some human somewhere bears the economic burden of that tax. And there's really kind of three possible parties, which are the shareholders of the company. The owners of the company might bear the burden, and they might bear the burden because if you tax the company, then the company has less cash to give to the owners, and the owner's value is typically thought of as something like the present value of all future cash flows of the company. So if those future cash flows are lower because you gave some to the government, then the shareholders' value will be lower, and so they'll be worse off economically. Alternatively, when you tax a corporation, it might alter their behavior in such a way that their demand for labor is reduced and the price for labor might go lower. The price for labor would be thought of as wages. If wages go down, then the corporate tax has sort of penalized the workers of the company because they don't get paid as much. And the third possibility would be something like maybe the customers. So if you tax a company, it might, prices might go up. If prices go up, that might mean that the consumers are worse off. And so when I say, yes, the corporation pays the tax, but it's not exactly clear who bears the economic burden of the tax, then that makes like the entire argument more complicated. Now, let's get back to your question. Your question was, should a company pay tax because it has like a big bottom line? And at first glance, the answer is like, well, yeah. I mean, we kind of most people believe in some form of progressive taxation where those who have a lot should pay a lot. And if you think of a company as a thing that bears a burden, then it's like clearly that thing should pay tax because it has a high income. But if you think of it in this other way that's a little more complicated.
Some of them have a high income. Again, we got to remember, a lot of corporations don't make that much money, actually. So you got to keep that in mind.
Well, so let's just think about a specific corporation as an example. And I like a common example to use now would be Amazon. So if we tax Amazon and the shareholders are worse off, then that might mean that Jeff Bezos, the very wealthy founder of Amazon, would be worse off, which would be like taxing Jeff Bezos. And that might not be such a terrible thing. But instead, if the workers end up earning lower wages, we might end up taxing the warehouse workers at Amazon, and that might not be such a good thing. Or alternatively, the prices that Amazon charges for all of its products might go up, and that might make everybody who buys things from Amazon worse.
So what you're saying is go ahead.
Oh, so it's not obvious, right? When you tax Amazon, it's not obvious that it is like taxing the person with the greatest ability to pay. It might actually be taxing the warehouse workers.
Because you need to know exactly where the incidence of the corporate tax is. That is to say, who actually is made worse off. And if it's the lower income people, they don't actually have that much ability to pay.
That's correct. So here's another way to think about this. Corporations pay tax, but there are other business
corporations.
entities.
So again, here's one thing maybe we should do in this episode. This is something that I have good friends that are extremely careful with this. They don't ever say corporations pay taxes. Corporations remit taxes, and then whoever pays is like the incidence question. So corporation remits taxes,
and someone else bears an economic burden, right?
Yep.
Or some human bears an economic burden, but the company can remit the tax to the government. But it is interesting. There are other business entities in this country which do not remit taxes. Those would be like LLCs and partnerships. But the income that's generated from those businesses does not escape taxation. The profits are passed on to the owners they call them pass-through entities. So whether the cash is distributed or not, it doesn't matter. The profits get assigned to the owners, and then the owners have to remit the taxes to the government through their personal tax return. That can create an ability to pay problem, which is kind of back to your original question. And the problem goes something like this. Suppose I'm an owner of an LLC, and the LLC makes $1 million, and the LLC then assigns the income to its members. I might have a tax liability based on my share of the income of the LLC. But the LLC may not have paid a dividend, which creates a bit of a conundrum. I have to pay cash taxes for earnings that are assigned to me, but I may not have the cash from the legal entity, the LLC, given to me to pay the tax. So now imagine if you're Apple. Apple has billions of dollars of income, and if all of the income were assigned to the shareholders, but Apple did not pay a dividend, and then the shareholders were required to pay, they may not have the cash to pay. So when you talk about the ability to pay, the company has the cash in the bank account to remit the taxes to the government. But if you just assign the profits to the shareholders, those shareholders may not have the cash sitting in their bank account to remit the tax, and it could create, under some circumstances, a bit of a problem.
So on the other hand, we'd like to just like theoretically know who is bearing the burden so that we could know who actually has this ability to pay. We can't do that. I mean, perfectly. There's certainly estimates of it. But then on the other hand, you're saying it is the case that the company actually has the liquidity to pay. So as far as the ability to pay, the actual funds are sitting at the corporation. So as an alternative to pass-through taxation, maybe the corporate tax has something going for it.
Correct. So one argument in favor of taxing corporations is that the corporation has the liquidity, has the cash in the bank account available to remit the taxes on behalf of the shareholders.
You could always just get around that if you own an LLC just by distributing some cash to yourselves to pay taxes. Okay, how about another argument, and it's very related to the first one. It's that, for example, we could turn every corporation into a flow-through, and so it's the actual shareholders that end up remitting the taxes. But that if we did that, that means, the hundreds of thousands, if not millions of shareholders at Walmart would now get the income of Walmart on their tax returns. It would just be really, really, really complicated, confusing, administratively burdensome. So one argument is that you just have these giant firms, and it's really easy to deal with this one single entity as opposed to all their different shareholders. So what do you think about that argument, that the corporation is an efficient collection mechanism for taxes?
Yeah, I actually like that argument in the sense that if we're going to attempt to tax the income that is generated by legal, like business entities, and we want that income the tax to be remitted in an efficient way, it's a lot simpler to send one bill to Apple instead of a separate bill to each of the shareholders of Apple stock. It could be like millions of people. And actually we do this not just with corporate income taxes, we do this with, like, for example, sales taxes. Most individuals have never remitted sales tax to the government, even though we think of ourselves as paying sales tax because it shows it on the receipt that you get from the grocery store. But actually what happens is the business entity remits the sales tax to the government. And why does that happen? Because it's like much more efficient for the grocery store or the retailer to remit the tax than it is for each of the individuals. And one case study of that is when Amazon back in the day didn't charge tax, and it was like sort of up to the individual to pay the tax of their individual states, and like nobody did it, right?
Yeah, so I mean, it's not just just with sales tax we do that. We do that also just with our labor income, right? So the individual income tax is for the most part actually remitted by corporations through withholding, right? So it's a lot of these instances in which corporations are seen as more efficient. It's just in both the sales and the income tax, the tax base is actually generated by the individual. With the corporate income tax, it's a little bit different in that the tax base is generated by the corporation, and we don't tie that to an individual person. We could, but we don't. But you like that argument. You like the
well, to me, both of the arguments that we've talked about so far, the ability to pay, like who has cash, and the efficient collection mechanism, are like reasonable arguments.
Okay, here's another argument. Are you ready for this? So what about the fact that the tax system, it turns out, exists so that we can fund public goods, and corporations use up public goods. So talked about Amazon. I mean, the Amazon trucks are driving on our roads, and they're using our educated workforce that we're paid for with public education dollars. So corporations use public goods. Why shouldn't they pay for those public goods?
When I ask my students why corporations should pay tax, this is probably the second most common answer I get. The first most common is it's just a big bottom line, so we should tax it. The second most common is those who use the public goods created by the tax revenues should pay tax. And this kind of gets back to the idea of what exactly is a corporation. And if you think of the tax burden as falling on a person, like the shareholders or the workers or the customers, you could also think of all the benefits that flow to a corporation as also flowing to a person. So if Amazon's using our roads, the benefits of those roads are flowing to either Amazon's shareholders or Amazon's customers or Amazon's workers. And so then you're right back in the first place, which is why not just tax the shareholders or the customers or the workers directly? Why do we need to tax Amazon? In other words, the burden of the tax flows through to a person, and the benefits of using the public goods also flows through to a person. So maybe we should just tax the person who receives the benefit instead.
That's one counter argument. I think there's a few others actually. They're super important here. One, I mean, and I actually phrased my question very specifically. I talked about roads. We fund a lot of roads with, for example, gasoline excise taxes, and corporations are not exempt from gasoline excise taxes. So people always use this example of like the Amazon trucks driving on the roads. Why shouldn't Amazon have to pay for those roads? Well, Amazon, as far as I know, has not switched to electric trucks. They use gasoline-powered trucks. They are paying gasoline excise taxes just like the rest of us to fund that infrastructure to some extent. Likewise, we fund our public education system in large part with property taxes. And many corporations own property, and those property taxes are going to fund the education of their future workers. So I think it is important when we talk about these public goods, many of them are actually funded by non-income tax sources that corporations do remit. That's the first thing. The second thing I think is actually super important here is with all of these arguments, you need to like have some kind of basis. You need to tie the reason that we want to tax to the actual tax itself. So, for example, something that we do at the federal level, we do fund with federal taxes is like our national defense, right? So we have an army. We have a gigantic army, and the best army ever. And it's not clear why having a large and indeed that army does benefit corporations, right? So if you are going to do anything internationally, it's just like really useful to be a U.S. corporation because if something goes really bad, we have a good national defense, right? But it's not clear why that is related to the size of your income at all, right? You could basically have no income whatsoever as like an unprofitable mining company or something like that, and yet you have this huge need for the defensive protection of the U.S. military. Alternatively, you could be a giant tech firm with no real physical assets whatsoever, just like this intellectual property, and not really be taking up much as far as social goods. And so, if we did want to tax people for the use of social goods, then the tax base should be something related to the actual use of those social goods, like, for example, the gasoline excise tax or property taxes to fund public schools and all that. Whereas we don't really think about the corporate income as a base as really having any connection whatsoever to the use of publicly provided goods.
I mean, yes, that's true. I mean, the defense industry and other things are interesting to me because the existence of those sort of are necessary in my mind for the existence of a strong set of legal protections, which are obviously very crucial if you're a nexus of contracts.
Yep.
And so forth.
And are important if you're a tech. I said a tech firm doesn't need an army. A tech firm does need a court system to defend its patents, and it
does need all the internet lines that are floating around through, in many cases,
but again,
publicly owned land.
If you want to use that justification for tax, then it seems you could have a tax that's actually related to those specific things.
It's possible, right? But some things are just sort of maybe a little difficult to tie down specifically to exactly the use. And actually, this is a kind of a fun problem to think about from a managerial accounting point of view, which we do all the time. You would like to assign costs to specific products, but it's sometimes very difficult to do. So you create this thing called overhead, and you just assign it like broadly. And at some level, like taxes are sort of imposed for like kind of public good overhead. You could think of it like that. Yeah.
Yeah.
So, but I guess here's maybe to summarize. The argument that companies should pay tax because they benefit from public goods, to me, is not very strong, because you could tax directly the underlying beneficiaries of those public goods, or alternatively, it's not even clear that an income tax is the right tax to impose for the creation and use of public goods, and that's what you're talking about. Yeah, so not a great argument.
Income's not necessarily correlated with the use of the public goods. And there's a lot of very unprofitable corporations that are using a lot of public goods.
Correct. And not paying any tax. In fact, they might be getting subsidized.
Because they're not profitable. Yep. Okay, how about this argument right here? Are you ready for this? So it is indeed the case that at least some people think about the corporations like this nexus of contracts, but that nexus of contracts, like that group of individuals agreeing to do these things, has a lot of political power. So, for example, corporations have the ability to lobby Congress to try to change the law, to try to change the political system. They certainly try to affect all sorts of behavior that really affects us. And so one thing you might think of is like, well, just somehow need to like limit that power. And if we have too much of something, maybe we want to tax that thing. So maybe as a balance to the power of corporations, we tax corporate income.
Yeah, so this is like an interesting idea, which my students never raise, and I haven't thought a great deal about, but there are some people who have. So if someone's interested in learning more about this, you could go look up Reuven Aviona, who's a law professor at Michigan. And he has some writings on this, but I think the argument goes something like this. When the government imposes an income tax, that gives the government a right to sort of examine the financial results of the company in order to impose the tax, right? And so we have IRS auditors or whatever. And the fact that the government is doing this gives the government some oversight of the company, and at some level might even influence the way managers behave, which can then give the government like a little bit of oversight over the company. It's like a much more philosophical argument as opposed to like these sort of direct arguments. It's like, oh, pay for what you use. This is more of a, let's give the government a little bit of a mechanism to have some legal right to examine what's going on at the companies. And maybe we do that sort of indirectly through the tax system instead of just directly requiring them to tell us exactly what's going on and open up their books and then not imposing a tax. So that's like one argument, which is intriguing to me. I think it's kind of a clever argument. I haven't thought enough about it to say, yes, this is great, or no, this is terrible. But to me, it is very intriguing.
It seems like a very ex post argument that like long after we've had a corporate tax and you just like need some reason to justify it. Oh, well, here's a reason.
Well, and interestingly enough, it does feel like ex post, kind of like after the fact we try to think about things.
I think this is something I thought about a long time ago. I mean, I think this is like a Teddy Roosevelt kind of argument that like we're going to
Yeah, and Ruben Aviona in a paper he's written, he goes through and he says, look, here's some of the arguments that were being made in like 1908 when we started thinking about corporate taxes. They were thinking about this. So it sounds ex post, but it maybe was not totally ex post. It was maybe thought of at the inception.
Yep. Okay, here's another one. Are you ready for this? So as you mentioned,
I don't know if I'm ready, but here we go.
As you mentioned, we just got a couple more of these. As you mentioned in our introduction, so corporations have, for example, a legal liability protection, right? So you can sue a corporation, you can take everything the corporation owns, but you can't necessarily affect the shareholders of the corporation. There's this corporate veil. This is a status that's provided by the government to corporations. And maybe for that right to have limited liability, you just have to pay something. And that price for legal liability is
Taxes.
The corporate tax. What do you think about that?
The corporate tax, yes. Yeah, I don't really love that argument either. And it sort of comes back to, well, two things to think about, right? There are many organizations that have limited liability protection, legal status and limited liability protection. You could think about not-for-profit entities, which don't pay any tax. You could think about flow-through entities like limited liability companies, limited partnerships, etc. And those types of companies also have limited liability protection, but they do not remit taxes. Their shareholders do. And so it doesn't feel like our desire as a society to provide limited liability doesn't feel necessary to pay for that with taxes. Clearly, other organizations that have that same legal protection don't remit taxes, and in some cases are completely tax exempt, and we somehow find that perfectly acceptable in our society.
Maybe we're just wrong in those instances and right with the corporate tax.
Maybe. So I guess then it comes to me down to this thing, which is who's benefiting from this legal protection? And I think in the end, it's probably like the owners, the shareholders. And so if you think about who's benefiting, then why do we tax the company? Why don't we instead directly tax the people who are benefiting? Because ultimately people are the ones that are benefiting.
So, I mean, to me, this is very similar to the taxing for the use of public goods argument. And this is just like another good that government has provided, a specific ability of these corporations to have limited legal liability. And if that's valuable, you should have a tax that's actually like correlated with the value that has. And it's not clear to me that value is correlated that well at all with corporate profits, with the taxable income of corporations. Okay.
You're not out of ideas yet?
We're coming down the road. Oh, there's a lot of these reasons. Okay. So another way is, basically all of the ways you're trying to squirrel out of taxing corporate, get out of taxing corporations. Oh, we should just tax the people. All right. So that sounds all well and good, but it's really hard to tax individual people. What if they're foreigners? What if they just don't want to pay the taxes? Our current tax system, what if you don't pay a dividend? And what if you don't sell your shares of stock? So you could think about the corporate tax as just like a backup for the personal income tax. It would be great to tax the individuals, but they're just too hard to get at administratively. We already talked about that, but they, can do all sorts of things, including living in other countries, that make it hard to do. So there's as a backup to our failed personal income tax system, we have to have a corporate tax. What do you think about that?
I do think that argument has some merit. And I think the most simple example right now is everybody half of the people in our country seem to have a great desire to tax these very wealthy kind of business tycoons like Jeff Bezos or Elon Musk or Zuckerberg. But one of the problems is they don't have what we would typically think of as realized income. And that means they don't pay taxes, at least not very much, through the personal income tax system. And some people would think of that as tax avoidance. Some people would think of it as that's just the way the law is written, so it's not avoidance. But in any case, they don't pay a lot of tax based on the increases in their wealth. And many people think of increases in wealth as income. So one way to get to that is to tax the companies that they own. which works really well if the economic burden of the taxes is borne by the shareholders. Then you mentioned some other specific examples, like, say, foreigners. Foreign individuals can own U.S. companies, and it might be really hard to tax their personal income because they aren't even residents or citizens of the United States. Well, if you tax the corporations that they own, then you're sort of indirectly taxing these foreign individuals, and that can be a useful, a reasonable way to prevent them from being able to avoid all taxes that would be paid in the United States. What do you think? I'm curious what you think on that one.
I think this has a little bit of merit. Okay, so how about one final, there's actually several more things we could talk about. Let's just talk about one. It's real simple and easy. We should tax corporations because it's just fair.
I dislike that.
Why do you dislike that?
It's fair to who?
To the person making the argument, Scott. Don't ask too many questions. It's just fair.
Yeah. Well, interestingly enough, if you want to hear more about this, you could go listen to a previous episode that we have where we talked to Amy Hanauer, who's the executive director of Citizens for Tax Justice and ITEP. And essentially she made a fairness argument. And I don't love the argument, possibly because I have 6 kids and they're always telling me life's not fair. But also
you're always telling them, they're not telling you.
That's true.
They're demanding fairness.
I'm just used to making life unfair, apparently, for all of my children and everybody else. But I think the reason I don't love it is because it's very hard to define what exactly is fair. And so if we don't know exactly what that means, then it's hard to use that as the argument for why we should impose a tax. That's
okay, let me counter that. I'll define fairness for you in this instance.
Okay.
Let's say as a society we've agreed rich people should pay more than poor people and people who are similar should pay about the same. So we believe in notions of like horizontal equity and vertical equity.
Yeah, correct.
Go.
So, and I, by the way,
there's your definition.
I am a supporter of horizontal equity and vertical equity, or fairness in taxes, basically, one way to think about it. But the issue to me is if I impose a corporate tax, it's not clear to me if I am, in fact, following those principles of taxation. Because when I tax Amazon, I want to tax Jeff Bezos, but I might inadvertently be taxing the warehouse worker, which seems to me like it goes against, for example, horizontal equity or vertical equity, or both. And that's not really what I'm trying to achieve. I want to tax Jeff Bezos, not the warehouse worker. And I don't know who I'm taxing when I tax Amazon, which makes it hard to claim it's quote unquote fair.
Yeah. So I would summarize that by saying notions of fairness really only exist, at least in my mind, when it relates to an actual human being. And so then it just gets back to the incidence argument of, well, we kind of would need to know who bears the burden.
And a lot of people don't like that it comes down to the incidence argument, or often politicians kind of choose their side of the incidence argument by saying something like this. Like, very commonly you'll hear the Republicans say, oh, if we impose a corporation tax, the workers will suffer. And underlying that argument is this idea that the workers will bear a heavy portion of the incidence of the corporate tax. On the other hand, the Democrats will say we should tax them so we can tax Jeff Bezos, which underlying that argument is that the corporate burden falls on the shareholders. And the reality is it's somewhere in between. It's not one and it's not the other. It's probably somewhere in between.
And to be clear, it's not like we know nothing about the incidence of the corporate tax. There's literally like maybe hundreds, at least dozens of papers about the incidence of the corporate tax. We have estimates for how much is borne by capital versus labor. There's
and almost all of those papers would say it's shared among the parties. It's not all borne by one party or the other.
I think generally shared more by capital than labor, but there's a lot of estimates out there, and in either case, it's shared.
It's shared.
So those are my questions for you.
Well, I think it's quite fun to think about, and I hope that people who are listening will recognize that when we're talking about this, at least I am not advocating for abolishing corporate taxes. I do think corporate taxes have a place. But I hope people recognize that the arguments for taxing corporations are far more complex than just simply looking at the bottom line and saying, oh, that's a big number, let's tax it. Because exactly what happens when you tax an entity, a legal entity, is not as simple as it might at first glance seem.
I agree.
Any final words, Jeff?
No, I'm wordless as usual.
Wordless as usual. I know that's a characteristic that is not, in fact, a part of Jeff's personality. It's been very fun to talk about this, Jeff. Thanks for asking the questions, and you know, if you're a listener and you have strong opinions on this, we would love to hear from you. Send us an email and let us know what you think. Maybe we can have you on and you can tell us your philosophy. So great to chat with you. This is Scott Dyring. I'm with Jeff Hoops. This has been another edition of Tax Chats. Goodbye.
Goodbye.